If you were a businessman or an investor, you must have heard about the Oracle of Omaha, Warren Buffett. But do you know his investment secrets? Hey everyone, and welcome to Prosperity Pulse Point. Buffett's a true rock star in the financial world, and over his incredible career, he's built a fortune by following some key principles. In this video, we'll be uncovering 10 of his secrets that most investors tend to miss. These are golden nuggets of wisdom that can set you on the right track to achieving your financial goals. So, whether you're a seasoned investor or just starting out, buckle up and get ready to learn from the master himself. Chapter 1. Reinvest your profits. The first secret involves the magic of compound interest. Imagine you invest $1,000 at an annual interest rate of 10%. That means you earn $100 in interest after a year. But here's the kicker. In year 2, you not only earn interest on the original $1,000, but also on the $100 you earned earlier. This snowball effect is the power of compounding. By reinvesting your profits, you harness this power and watch your money grow exponentially over time. So remember, don't just let your profits sit there. Put them back to work and watch your wealth climb steadily. Chapter 2. Be willing to be different. Buffett emphasizes the importance of independent thinking in investing. When everyone's rushing to buy a certain stock, it's tempting to follow the crowd. But remember, the herd mentality can lead you down a path of losses. The key is to do your own research, analyze the market, and have the courage to go against the grain if necessary. Think of it this way. If everyone's buying umbrellas because it's drizzling a bit, does that mean it's guaranteed to pour all day? Not necessarily. Sometimes, the best opportunities arise when you're willing to be different and think critically. Chapter 3. Never suck your thumb. This one might sound a bit strange, but Buffett uses the phrase, never suck your thumb, to highlight the importance of taking initiative in your investments. Don't just sit back and passively hope for the best. Be proactive, research companies, understand the market trends, and make informed decisions. Let's say if you're planting a garden, you wouldn't just stick seeds in the ground and wait for magic to happen, right? You'd water them, provide sunlight, and maybe even add some fertilizer. Investing requires similar care. Stay informed, be proactive, and watch your financial garden flourish. Chapter 4. Pick businesses, not stocks. This is a core principle of Warren Buffett's value investing philosophy. Many investors get caught up in chasing hot stocks based on short-term trends. But Buffett suggests a different approach. Focus on the underlying business. Instead of just looking at a stock ticker symbol, delve deeper. Analyze the company's financials, understand its business model, and assess its long-term prospects. Are they generating consistent revenue? Do they have a competitive advantage? How is their management team? By understanding the business itself, you'll be in a much better position to make informed investment decisions. Remember, you're not just buying a piece of paper. You're potentially becoming a part owner in a real company. Choose businesses you believe in with a solid foundation for future success. Chapter 5. Go for public and at least 10-year-old companies. Buffett emphasizes the benefits of investing in publicly traded companies. Public companies are required to disclose their financial information regularly, which provides you with transparency and a clearer picture of their health. Additionally, publicly traded stocks offer greater liquidity, meaning you can easily buy and sell them when needed. But here's another layer to the secret. Focus on companies with a minimum 10-year track record. These established players have weathered market ups and downs, proving their business model has some staying power. By looking at their past performance and financial history, you gain valuable insights into their future potential. It is not that different from choosing a restaurant. Would you rather try a brand new one with no reviews, or a well-established place with a history of satisfied customers? With established public companies, you get a bit more peace of mind knowing they've been around the block, and hopefully will continue to be for years to come. Chapter 6. Watch small expenses. It might seem insignificant, but even small expenses can chip away at your investment returns over time. Buffett is a big believer in keeping costs low. Here's why. Investment fees, commissions, and account maintenance charges can add up quickly. These fees eat into your profits, hindering your long-term growth. The good news? There are ways to be smart about costs. Look for low-cost index funds, which offer broad market exposure without hefty management fees. Consider online brokerages that typically have lower commission structures. By being mindful of these seemingly small expenses, you can maximize your returns and keep more of your hard-earned money working for you. Remember, it's not about pinching pennies on every transaction, but by being strategic about fees, you can create a more efficient investment portfolio that allows your money to grow to its full potential. Chapter 7. Limit what you borrow. This secret tackles the concept of leverage, which essentially means borrowing money to invest. While leverage can potentially amplify your returns, it's a double-edged sword. Unexpected market downturns can magnify your losses if you're heavily invested with borrowed funds. Buffett emphasizes the importance of investing with your own capital and avoiding excessive borrowing. Remember, the stock market can be unpredictable. By limiting leverage, you minimize your risk exposure and protect yourself from potentially crippling financial losses. It's just like inflating a balloon. A little air makes it bigger, but too much and it pops. Leverage can inflate your returns, but be careful not to overinflate and risk a burst. By managing your risk and limiting borrowing, you can invest with greater peace of mind. Chapter 8. Assess the risk. Buffett stresses the importance of understanding risk before diving headfirst into any investment. Not all investments are created equal. Some, like government bonds, offer lower returns, but also carry minimal risk. Others, like high-growth tech stocks, have the potential for significant gains, but also come with a higher chance of losses. The key is to assess your own risk tolerance. How comfortable are you with potential fluctuations in your investment value? Are you prioritizing long-term stability or short-term gains? By understanding your risk tolerance, you can choose investments that align with your financial goals and sleep soundly at night. Chapter 9. Know what success really means. This secret might surprise you. While Warren Buffett is undeniably a financial powerhouse, he defines success differently than many might expect. Here's the thing. Accumulating vast sums of money isn't the ultimate goal according to Buffett. Throughout his life, Buffett has emphasized the importance of building strong relationships and surrounding yourself with loved ones. He believes true success is measured by the quality of your connections, not just the quantity of your wealth. Take a page from Buffett's book. While financial security is important, don't lose sight of what truly matters. Invest time and energy into nurturing your relationships with family, friends, and loved ones. After all, at the end of the day, it's the love and support of those around you that bring the greatest fulfillment. Chapter 10. Focus on the long term. This might be the most crucial secret of them all. Focus on the long term. The stock market can be a roller coaster ride with ups and downs along the way. Temporary dips and fluctuations are inevitable, but Buffett emphasizes the importance of staying patient and disciplined. Don't get caught up in the daily noise of the market. Instead, focus on your long-term investment goals. Whether it's saving for retirement, funding your child's education, or building wealth for the future, having a clear vision will help you weather the storms and stay invested for the long haul. Remember, Buffett himself is a testament to the power of long-term investing. His success wasn't built overnight, but through decades of smart investing decisions and unwavering focus on the future. By adopting a long-term perspective, you too can harness the power of compound interest and watch your wealth grow steadily over time. There you have it, 10 of Warren Buffett's golden secrets to set you on the path to investing success. If you enjoyed this video, don't forget to hit that like button and subscribe to the channel for more informative content like this. Remember, financial advice may vary from person to person, so always do your own research before making any investment decisions. Thanks for watching!